What is up everybody, Gifford here and welcome to another video. And in this video I want to talk about directly why you should be investing into the stock market from New Zealand, and I think you're going to be shocked about what I'm about to show you. So if you have not thought about investing at all into the stock market, I want you to give it a think, because I've invested in the last 4 or 5 years, and from what I've been working out and finding, pretty big stuff. So I think you really need to start looking into it as well. So getting into the video, the first thing I want to talk about is how inflation impacts your savings. Here you can give it a read. The national average cost of a movie ticket in 2005 was $6.41. Now do realize this is probably an American site. So in 2023 the price was $11.23. Consumers recognize these prices increase as a sign of inflation. But anyway, before reading any more of that, inflation is what happens to money over time. So the governments have the ability to just print out more money, so therefore it devalues your own money, and when it devalues that, all the costs go up, because obviously since the money's gone down and you need more of it to buy something, the prices just go up naturally. And this is what living costs is all about, and why inflation is such a dangerous thing, and why you need to invest to combat this. And the other thing that people don't realize with inflation is that it only goes up. It never comes back down, okay? All you ever get is the inflation coming lower, well not lower, but yeah, instead of like 5%, it goes down to 2% or something. So it's still increasing actually. It's not ever going negative, and this is the biggest problem that people don't seem to understand. And if you do not invest and all you do is spend your money and you don't grow it in any way at all, you are going backwards. Because actually the terrifying thing is, if you do invest and your money goes up by a little bit, you're still actually just keeping level. If it goes up with inflation, it's still level. Like, you've not made any money on top of that, even though you've invested this money. So here is an NZ chart of the New Zealand inflation rate, and we can see here it's gone back from about 2016 where it was fairly low, and then recently after the whole pandemic, you know, with the whole thing about someone eating a bat wing, don't censor me for that. Anyway, it went up to 7 point something, and then it slowly started to come back down again. But see these outsized inflation there? That means that your money got absolutely devalued, and if you did not make that back in any other assets, so you didn't have any assets here during this time, then you would have got wrecked through this. Now luckily I had assets, so I had property assets and I also had stocks, and they went up in value, and basically they needed to go up, you know, every year at least compounding 6 or 7% to just be level. That's level. That's not even making money on top. I did make more money on top of that, especially with property, because I had a rental investment property. Yeah, if you didn't have anything, you got wrecked, and the money that you have in your bank, especially if you have it in the term deposits, because while they were paying okay, they probably weren't even keeping up with inflation, because they never do. The bank makes more money from your own money. So that's something to think about and to really understand more, because if you don't understand this, you're going to be struggling. So unless you have a high paying job, and when I mean like high paying job, I mean, I think 100,000, over 100,000 would be a good, you know, that's a high paying job to me that you could live by on that in New Zealand. If you don't have that, or even $150,000 job, or the household makes that amount, you're going to be struggling. And if you're wanting to buy big things like a house, a car, you know, providing for your family, if you don't understand these assets and how they grow in inflation, you're going to get wrecked by living costs. So moving on, here is the chart of the 1 year term deposit rate, and you can see here that they do go up and come down with inflation. But as I said before, bank rates are friggin' terrible, because they will always be lower than what you can borrow money for. You borrow money off them, because banks are there to make money. They're not there to lend you money to be able to provide for your lifestyle. That's what they do, but they lend it on top. They're there to make money. And if you've ever seen, banks make massive amounts of profit on everyone, okay? And worse, they don't even have too many New Zealand banks. So a lot of our banks goes to Australia, or a lot of our money goes to Australia or overseas or whatever. But yeah, you cannot depend on the banks for money. You can use them as leverage to borrow that money to then, you know, use for yourself to invest elsewhere to make you money. But just going off term deposits, banks are going to be making money off you. So how can you combat this? But before we get into that, into my own portfolio and how you can actually start yourself, you need to understand this thing here called compound interest. Compound interest is when you save and you keep saving and saving and saving into something like the stock market. Every year, generally the stock market, or the S&P 500, which is the US stock market, will give 8 to 10% returns. That is very good, because that will combat against inflation. You need to be investing money into something like that, or to a world diversified fund, which is a lot safer. Now, I just use the US because, I have a lot of faith in the US of the stock market always going up. But yeah, the world index, into that is the whole total portfolio of the world stock market. So the whole stock market was basically have to crash, which is, near impossible. I don't think that will ever happen, but it could happen. That is a lot safer than the US markets if you want to, and that typically gets around about, from what I've read, 7 to 8%. The US gets about 8 to 10%, over the long history of 50 years. So yeah, so this is here. I want to show you this, how to do it, how to input into this, and showing you how you grow your money. So if you're a young person, like you are, 20, you just started a job, you're living at home, or you're flatting, and you can put a couple of dollars every week into this to really start understand in investing, and then maybe you could use this to buy a house later on. It's really good you understand something like this and show that this is the way money grows. So let's have a look at this calculator. Let's say you put in a minimum investment, let's say $1,000, and then you try to put a contribution, and let's just say every month you can put $20 away each week, say 4, let's make it easy. So it's $80. Actually, let's make this a whole figure, $25 a week. I think that's doable, right? And then let's say you do this for 35 years. Let's say you're a young person, you want to do this for 35 years. That puts you to 55 years old. So you're using it for retirement. And then the estimated interest earned, let's just write down 8%. So that's pretty good. We won't leave that there. And annually it compounds. Now you just click here and it's going to tell you how much this is going to compound to. So we can see here, the results are in 35 years time, you will have $221,000 in there, and you can see that these are your contributions, and that this here is your future value when you put it up consistently. So this here is obviously for investing for retirement. So actually, if you were investing for retirement and you're 20 years old, you would be 45 and then years there. So click there, and then that gets you to $500,000. So that's off, $25. Now, say if you are in your 30s or 40s or 50s, obviously this is going to make a big difference, because you need time to compound stuff. So let's just say you've only got 15 years and you're still doing this amount. Now, it's not going to look pretty. So it's 15 years, $25 every week, $100 every month. Yeah, there's not a lot of money there. So really, I'm telling you this, you want to be doing this long term. Okay. Now we're going to come back to this calculator and I will show you how powerful it will. So just stick with me. But first we'll go into my Sharesies account just to show you what a real account has. So here is my Sharesies portfolio, and we are in the Kiwi Saver. We can see here that the Kiwi Saver returns actually for the last 6 months have been, negative 1.4, and so it hasn't been doing too well. And then if you go 1 year, it's gone a little bit better at 6.97. So this really shows you, I'm in the aggressive fund, but this shows you that the stock, the stock price will go up eventually. So if you go to 5 years, we can see here that it's, it toppled out and then it crashed a bit, but eventually it made higher highs. And this is why investing into the stock market, to me, is the bare minimum that you've got to do. You've got to understand this stuff, periodically put some money in, because you've got to combat inflation. And inflation is just, you can never get rid of it. This is a human world that, this is just a human made system that we've done for ourselves. We can print more money. This is why, we're always going to have it, and prices will always go up, and everything will always cost more than they did the previous years. And the only thing you can do about it is to invest more money so that your money will grow quicker than inflation. And later on, you can invest big amounts of money, and the knowledge that I'm showing you here will eventually get you to some sort of financial freedom, or at least stop living week to week, which I have, because that's what I was doing, living week to week with a mortgage and whatnot. And then when I started investing did I really start getting ahead. So here is my portfolio at the moment. I've got other videos about how this works, but for now, really it's just to show you that because I consistently invest. And now, don't worry about this bit here. I got a video explaining about what's going on here because I've rearranged my portfolio. But if we look at the last 1 year, just look at this path here, that if you consistently invest over time, then you are going to be in the gains, and that the returns, over a long period of time will go up. What's a 5-year mark? Yeah, so you can see me mucking around in there, but you can see at this point here in, when was this, start of 2023, that if you invest consistently, that it will go up. And I was actually negative. See, look, I was negative 16%, and I had to bring that all back. How far negative? Yeah, look, negative 26%. And then through diligent investing periodically every week, then it started going up. Now, the other thing you have to do with this is that you do have to add some sort of income in. If you have watched some of my videos, you'll know that I got a couple of side hustles to add this in, because my first job, while pays okay, like decent, I think for what I do, I'm not a manager or anything like that. So, but for what I do, I'm okay with that pay. Then you do need to add some other extra in there to invest more. So going back again, now just to show you what you saw there, I have $20,000. So if I was to adjust this, let me adjust this to $20,000. Just make it really easy, and I contribute, let's say I put in about $100, right, minimum every week. So let's change this to $400. And my time, I'm doing this for retirement, I've got plenty of time, so let's put in 20, let's go 30 years without giving away my age here, and then go to estimated interest. So for 30 years at 400, and I've got 20, let's hit calculate, and there we go. So doing that, what I'm doing at the moment, it's for 30 years time, I'm going to have $745,000. And I can tell you that I'm mortgage free at the moment. And yeah, so adding that and investing only $100 a week of what I've got there is already going to hit $745,000, which is going to give me a comfortable retirement since I've paid off my house. Or if we upgrade to another house, then obviously I will be using some of that money as well, but that's only for myself. I also have a partner who will also have Kiwi Saver and is putting money as well into there, so they will also have, I would assume, at least $500,000. So that is going to be enough for retirement, as well as hopefully having some pension back then. But where this gets crazy is that actually my account isn't just $20,000. My account, my Kiwi Saver at the moment has over $60,000, and then my whole portfolio is over $140,000. So let's just put in what would happen, so in that, I'll put $140,000 in here right now, because that's what my total account is. And my monthly contributions, now I do more than $100, but let's say I up that to $200, because when my stock market, I do also trading, and I get about $150 from that every week now. And I do this for 30 years, and then estimated return is only 8%. Bear in mind that I'm getting a lot higher than that in my trading, but let's just go with 8% right now if I was just to go with the risk, and we hit calculate. And you can see there in 30 years time with the investing that it is over $2 million. That's $2.5 million, and that's real. Like, I have $140,000 invested in the stock market. So that hopefully shows you the power of investing, and also gets you to understand about the impacts of inflation, because just meeting inflation and investing, the recommended ones, is just going to get you to level. Unless you have a high paying job, then you're not going to have a chance, and you're going to pretty much struggle, right, for the rest of your life if you don't understand these key concepts. Anyway, I don't want to scare you. I've done other videos about how to trade and all that, but that is a really important one. I'll probably do a more expanded video on this, just not sort of this quick, overview of it, but it's really something to understand, and talk to your friends about it. Ask them what are they doing for their future. It is scary, but you really want to be understanding this now, because if you can understand it now, you can start compounding now, and it's never too late to compound at all. About 7 years ago, I had a mortgage, and I thought that was going to take 13, 14, 15, 20 years to pay off, and in 7 years I paid it off. So really shows you how compound investing can really work, or just investing in general, and understanding trends and how the markets are moving, getting some deeper knowledge into that, because eventually if you keep learning and understanding, you are going to make a good move, and hopefully a move that will change your life. So the summary of this video is inflation only goes up, it never goes down. It'll go lower, but every year the prices will always keep going higher and higher. So will your wages and what you get paid, but I can assure you that they will not always keep up with it. This is why you must invest. And even investing in the bare minimum, you're only going to be level. You need to do on top of what you are doing. That's why on my channel I show that I'm doing some extra side hustles to put money into my investing, and that's why I have a portfolio over $140,000. Click this video here if you want to see that portfolio, but otherwise thank you very much for watching. If you have any questions, put them down below, I'm happy to answer them. If you want to do some investing and start into it, feel free to use my referral links, especially my Sharesies one. I'd really appreciate that. And also go over to Instagram and follow me there. I post about my stock market journey, what I'm doing, what I'm buying, how my trading is going, and also just, you know, weekly news every other day. So feel free, and you can comment, you can DM me over there as well if you want some general guidelines. Yeah, just if you're, you know, wanting some information about that as well. Feel free to like and subscribe if you want to hear more videos from me. The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use Invest Now for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. And also, I also do personal finance and property investing ones, although they're pretty minor at the moment because I am really concentrated on the stock market and my stock market journey. Thank you very much for watching, and I'll see you in the next video. Thank you, bye.